Okay, now I'm going to show you how to do these two questions. Have the question paper in front of you. After I show you, you should do it yourself. Try the question yourself again. Okay, so this question come out in November 2010, paper 2, question 2. A lot of students cannot answer this question. Now read this question carefully. A firm of accountants operate a job costing system to apportion cost to its client. Hours worked by the professional staff form the basis of charging out overheads. Yeah, you see, at the beginning of, at the previous video, I have said that normally overhead is apportioned according to machine hours. But in this case, they are saying that hours worked by professional staff form the basis of charging out overheads. Okay, so now you may have a idea what they are talking about. At the beginning of each financial year, a predetermined overhead rate is calculated from budgetary information. So like what I have explained in the previous video, is it at the beginning of the year or even before the start of the year, we will do the budgeting to calculate a predetermined overhead rate, which we call overhead absorption rate, right? Okay, so now this from this question you can relate back to what I have explained to you in the previous video. Okay, in the end of year in the year ended 30 June 2010, the budgeted overhead were absorbed at a rate of $12 per hour of professional staff time. So in the previous video, I said that the overhead absorption rate is normally based on machine hours, but sometimes it can be based on direct labor hours. So in this case, they are telling you that the overhead absorption rate is $12 per hour based on professional staff hour. Okay, actual overhead incurred, so actual overhead is calculated at the end of the year. Okay, is 618,000, and overhead over absorbed. So I have explained to you, overhead is absorbed on a progressive basis. Okay, and then at the end of the year um, we will compare the overhead absorbed with the actual overhead, and and we and we calculate the difference will be either overhead over absorbed or overhead under absorbed. Okay, so professional hours worked over budget were 1,009 hours. Okay, so let's see what they are asking. Calculate for the year ended 30 June 2010, the budgeted hours worked, the budgeted overhead expenditure. Okay, so this one is not difficult. You see here says that the budgeted overhead were absorbed at a rate of $12 per hour of professional staff time. Okay, so you see the budgeted overhead were absorbed at the rate of $12 per hour of professional staff time. So what do you understand with this sentence? This one simply says that the overhead absorption rate is $12 per hour, $12 per hour of professional staff time. Not machine hours. They are using professional staff hours. Okay, or $12 per professional hour. Okay, so how do you calculate the overhead absorption rate? It is said here that the overhead absorption rate, okay, a predetermined overhead is calculated. Hours worked by professional form the basis of charging out overhead costs. It operates a job costing system to apportion costs to its client, to apportion the fixed overhead costs to its client. Okay, so this $12 will be obtained. Okay, so now the question asking you, calculate for the year ended 30 June 2010, the budgeted hours worked, the budgeted overhead expenditure. So actually, budgeted overhead expenditure, okay, you see budgeted overhead expenditure divided by budgeted hours worked is $12. Okay, so now they are So from all these things here, you are actually trying to get a jigsaw puzzle, but even though your mind is scattered around, so you have to just look at things. Professional hours work over budget were 1,009 hours. So this one is a bit of confusion, but we try to figure out. Professional hours worked over budget were 1,009 hours. So can we, most of the students interpret it as professional hours worked more than budget, or professional hours worked exceeded budget by 1,009 hours. So that means actual professional hours, you see professional hours worked, that means the actual professional hours worked exceeded budget by 1,009 hours. This is how I interpret the sentence, which is how most students interpret the sentence. Sometimes the sentence is not very clear. That's why you can write an assumption like this, because you know the sentence is not very clear. So my assumption is, it is assumed the question meant professional hours work exceeds that budgeted by 1,009 hours. That means, in other words, the actual hours minus budget hours is 1,009 hours. So now they're asking you, what is the budgeted hours worked? Okay, so so we have everything very confused. Okay, so now have the question. So you should have the question paper in front of you. So now we are looking at the at this and digest it. So part A of the question says, calculate the budgeted hours worked. The budgeted hours worked. Okay. So they are saying that overhead over absorbed was 7,005. Okay. So overhead so that means overhead absorbed. Overhead is over absorbed. Okay. So that means the overhead absorbed is is more. Okay, overhead absorbed. So that means the overhead absorbed is actually absorbed too much. That's why it's called overhead over absorbed. Okay, so the question did give you that the overhead, the actual overhead is $618. Okay, so the overhead is over absorbed. Overhead over absorbed was 7,005. So that means the overhead absorbed that means it's absorbed too much. So overhead absorbed minus 7,005 will be the actual overhead incurred. The actual overhead is 618. Okay. So overhead absorbed, because overhead is over absorbed, that means they absorb too much. So that means the overhead absorbed exceeded the actual overhead by 7,005. So that means the overhead absorbed is the actual overhead, which is 618,000 as given in the question, plus 7,005. Okay, because the overhead absorbed is more than the actual overhead by 7,005. So overhead absorbed is we derive is 625,000. So in the previous video, I have explained that overhead absorbed will be equals to your overhead absorption rate times by the actual hours. In the previous video, I said actual machine hours. But in this case, they are using actual professional hours. So in any case, we just call it actual hours. So the overhead absorbed will be equals to overhead absorption rate, which is $12, times actual hours worked. Okay, so actual hours will be equals to overhead absorbed, which is 625,000, divided by 12, which is 52125. Okay, so the question is saying, so if you want to assume the other way around, you can assume, but try to read the question properly, because most of the students actually interpret it as the question meant that professional hours exceeded the budget hours by 1,009 hours. So now you have the actual hours, 52125, and the question is given that the actual hours exceeded the budget by 1,009. So the actual hours is more than the budget plus by 1,009. So that means the budget budgeted hours plus 1,009 will be equals to actual hours. Okay, so the actual hours exceeded the budget hours by 1,009. So that means the budgeted hours will be the actual hours minus 1,009. So budgeted hours will be 52125 minus 1,009 will be 50225 hours. So we have answered the question. So A part 2 says, what is the budgeted overhead expenditure? Okay, so in the previous video, I've said that this $12, which is the overhead absorption rate, will be equals to the budgeted overhead, means the budgeted overhead expenditure, over, I mean divide by the budgeted hours, okay? So budgeted hours we have is 52, so that means now we are just solving the equation. So budgeted overhead expenditure will be equals to 12 times budgeted hours work times 50225, which will be equals to $602,700. Okay, part B of the question. Okay, so this information is for part B. The cost for job 3816. You see, in a big accounting firm, you will have many clients. So how to identify which client is which client? Normally we'll give a job code, okay, so that we can easily know which client. Okay, no, sometimes if the company does not have many clients, they will just say, oh, they will just put the client's name here. But you know, sometimes the big accounting firm, they may have even have two clients with very similar name. That's why they identify with job code, so as not to be so as to be very clear. The cost for job 3816 completed just before 30 June 2010 were, so this is the information. Direct wage at $30 per hour is 8850. Overhead cost at $12 per hour, 3540. The firm charges out all job to give a profit margin of 30%. Calculate the amount charged for job 3816. Okay, so this is the cost, okay? Direct wage and then the overhead. Okay, direct wage and then the overhead. They don't have direct material, you know, because you are a firm of accountants. It's something also similar with a law firm, which is labor, so-called professional firms. Okay, so they don't have a direct material. They are not producing goods for the client. They are producing work for the client. So their cost is mainly the direct wage cost, the staff cost. Okay, the accountant staff cost, the accounting staff cost, and also the overheads. There's no direct material. Okay, so these are the costs for their job, and the profit margin is 30%. So now are you clear? So what is the cost? Can you take your calculator and add 8850 plus 3540. 8850 plus 3540 will be equals to 12390. 12390 is the cost. Okay, 12390 is the cost. The cost is direct cost plus overhead cost is 12390. Okay, they said that the profit is 30%, to give a profit margin of 30%. So that means the profit is 30%. Of course, okay, so if the profit is 30%, okay, this whole box is actually the amount charged to client. The amount charged to client will be the 100%. Okay, so the profit margin, charge out means your sales price lah, that means your revenue lah. Your revenue is 100%. Your margin, your profit margin is 30% of the revenue. Okay, so that means your cost is 70%. So 70% equals 12390. Your cost is 70% and is 12390. So what is the amount charged out to client? Okay, the amount charged out to client for job 3816 will be 12390. 12390 times 100%, okay, because the amount charged out to client is 100%, over 70%, which is 17700. So once you have it clear, it's actually just simple mathematics, okay? So now look at part C, okay? The firm has decided to revise its overhead charging system for the next year, so 30 June 2011, which is the subsequent year. It will charge different rates for senior and junior staff. A premium of 50% will be applied to the hourly overhead rate for senior staff compared to junior staff. So that means the senior staff rate will be 1.5 of that of the junior staff. Okay. So this is senior staff hours, and this is junior staff hours, and this is budgeted overheads. Okay. So that means that they are saying that the overhead absorption rate for senior staff is 1.5 times more than the junior staff, the overhead absorption rate. So calculate for 30 June 2011 the overhead absorption rate to be applied to senior staff and junior staff. So again, this is once you understand it, it's actually quite simple mathematics. So that means the the junior staff hours is 40,000, okay, 40,000, and the senior staff hours is 15,000. Okay, so assuming that Y is the overhead absorption rate for junior staff. So they are saying that the senior staff, we treat it as 1.5 of that of a junior staff. So the senior staff will be 1.5 Y. So assuming that Y is the OAR for junior staff times 15,000, okay, will be this is the budgeted overheads. So we solve for Y, and we get Y is 10.56 hour. So 10.56 will be the overhead absorption rate for junior staff. So that means you've got to solve part 2 first, then part 1. Part 1, so the overhead absorption rate for senior staff will be 1.5 times 10.56. So it will be 15.84. Most of the students don't have problem answering this part. Then part D asks, explain how work in progress might be calculated in a firm of accountants. So normally part D is so-called quite a like common sense question, and there isn't a fixed concrete answer for it. So they are so-called testing the ability of the student to explain in their own way, according to their own understanding, not just by memorizing. So explain how a work in progress might be calculated in a firm of accountants. You see, at the end of the year, for your year end is 30 June 2010 or 2011. You will have a lot of work, a lot of job for clients, whether in a law firm or accounting firm. The job is half done. That means you have done your accounts halfway but not submitted yet, and there are lots of these work in progress. That means work that are half done. So work that are half done, how are you going to calculate? You have incurred the staff cost, and you have incurred the overheads for this work in progress. How do you treat it? Work in progress will be treated something like work in progress will be treated something like a stock lah. Yeah, your staff cost and your overhead incurred for all the jobs will be it's not a debtor yet, because you haven't billed the client yet. The job have not completed, so that means you are treating as if the revenue is not earned yet. So it's not a debtor yet, but it's something like a stock. So we will put it under current asset. Work in progress, we will put under current asset. How much is the work in progress? So how do you value your work in progress? So now I'm trying to explain as best as possible in my own words. Okay, so work in progress means I'm just explaining like what I've explained to you, means work partially completed. It should be calculated by adding the following costs. Okay, the cost, direct wage cost, calculation of direct wage cost will be hourly wage cost times actual hours worked. Okay, yeah, because the work in progress, it will be times by the actual hours worked, because you want to value uh, how 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 much you have incurred on all these work that are partially completed. So and then you must, by adding the following costs lah. So direct wage cost add overhead wage cost. How you calculate overhead wage cost will be overhead absorption rate times actual hours worked. So this is how I explained in my words. So you can, so part D actually test your understanding and your ability to explain the question asked. Okay, so then now we come to November 08. Remember I told you that in 2008 there is new syllabus and old syllabus. So 9755 is the new syllabus. So have your question paper ready. So the question asked now, answer both part of this question. So part A says, shown below are details of 1 month's production and overhead budget for the assembly shop of a manufacturing company. Budgeted production, budgeted assembly time. You see, in some factory, in some manufacturing factory, okay, for example, if your factory is manufacturing television, or cars or whatever, so maybe you may like to go to a tour in some of the factories in Singapore. Okay, they will have a few departments. You see, the thing is, you okay, so the factory may be divided into many sections. So this section will be manufacturing the electronic keyboard. The other the other section will be manufacturing the frame. Okay, then after that you will go to a final, so-called somewhat a final part of the factory, which assemble. That means assembly means jigsaw puzzle, putting all the parts together, so that so that it will so that it will form a television. Okay, putting the electric circuit and then a frame and then all these things together. So that is called assembly shop, the assembly department. So they are saying that this shown below are the details of 1 month production and overhead budget of the assembly shop. That means assembly department of a manufacturing company. So budgeted production, product A, B, C. So we have maybe different type of TV. Or product A maybe is a TV, product B is a computer or whatever. Okay, so this is budgeted production for product A, B, C. Budgeted assembly time for per unit of product A is 3 hours, per unit of product B and per unit of product C. Budgeted overheads at 2 levels of possible activity are given below and involved variable cost, semi-variable, and fixed cost. Okay, so this is the, so if, that means they are saying that if the budgeted hours is 5,000, the depreciation will be so much, the indirect material will be so much, indirect labor will be so much. Okay, and then if the budgeted hours is 6,500, the depreciation will be so much, indirect is like this, and indirect labor is so much. Calculate the budgeted overhead absorption rate to be applied to the products in the assembly shop. What is the budgeted overhead absorption rate? So now you have already understood that overhead absorption rate is derived at the beginning of the year or even before the year start from budgeted information, from budgeted from budgeted fixed overhead, and from budgeted fixed overhead and budgeted hours. Okay, budgeted hours. So they have given here budgeted assembly time. We don't know whether this is human hours or machine hours, but we know it's budgeted hours lah. So don't care, just use budgeted hours because they're given here budgeted hours. What? Okay. So we also know from the previous video, that overhead absorption rate means overheads lah, means overheads means so-called fixed overheads, and overheads does not include direct material, direct cost, direct material or direct labor. Okay, so he says that budgeted overhead at two levels of possible activities given below. Okay, 5,000 and 6,005, and involve variable cost, semi-variable, and fixed cost. Okay, variable cost is like direct material cost. Okay, budgeted overhead. So they are saying that all these are overheads, whether it's um sorry, I mean overheads can include variable overheads and fixed overheads. Okay, so they are saying that um, the overheads here includes variable overheads, semi-variable, and fixed costs. So now it's a headache. How are we going to calculate the overhead absorption rate now? Okay, I have the question paper with you. Okay, so now from what we see, so now we are trying to analyze all these costs. Is it this budgeted hours is 5,000 and 6,005, but the depreciation is the same. So what can we tell of this? What can we tell of this? What we can say is depreciation is a fixed cost, right? It's a fixed cost. Okay, so how about indirect material? Indirect material. So why don't you take use your calculator, take 2,000 divided by 5,000. How much you get? 2,000 divided by 5,000. I get 0.4, right? And then you take 2,006 divided by 6,005. Okay, 2,006 divided by 6,005. You get 0.4 also. So what can you understand from indirect material? What I can understand from indirect material is I take 2,000 divided by 5,000, I get 0.4. I take 2,006 divided by 6,005, also I get 0.4. So what I can understand from this indirect material is it is a variable cost. Because it varies directly with the production level, with the budgeted hours. Okay, the more budgeted hours you incur, the more indirect material, and it's proportionate. The increase is proportionate. Okay, that means indirect material, I can conclude, is 40 cents per hour, per budgeted hour. Okay, per production hour. So indirect material is a variable overhead, a totally variable, at a rate of 40 cents per hour. Depreciation is a fixed. Okay, so that means at any level of production, if the budgeted hour increase or decrease, the depreciation is still the same. So I can understand. But indirect labor, this is a problem. Okay, you see now I analyze my cost. So I have summarized this thing over here. Product A, B, C, and then the budgeted assembly time. Product A, B, C, okay, and then this is the budgeted production as given in question, assembly time. So total budgeted hours. Okay, so the depreciation I have concluded, okay, is 14,000. So the budgeted hours here. So how I get the budgeted hours from the budgetary information as given? It will be this one times this one will be this one. Okay, budgeted production times assembly time per unit. Okay, so will be 1,005. So I multiply across and I add down. I get 5,007 will be the total budgeted hours. So depreciation is a fixed cost at 14,000. Okay, so the overhead absorption rate for depreciation is 14,000 is the budgeted cost for the depreciation overheads, divided by 5,007 is $2.40 per assembly hours. Okay, so the indirect material from what we calculated just now, the indirect material is 40 cents per assembly hour. Okay, 2,000 divided by 5,000 is 40 cents. Okay, it's always 40 cents. 2,006 divided. So all these are overheads. So that means we got to calculate the overhead absorption rate. So we are calculate the overhead absorption rate one by one. So the overhead absorption rate, depreciation is an overhead, indirect material is an overhead. So depreciation, the absorption rate is $2.46 per assembly hour. So indirect material, the absorption rate is 40 cents per assembly hour. So indirect labor, you see, at 5,000 hours, the cost is 9160. So the cost per budgeted hour is 1.832, but at the 6,005 is 9610. This is given in the question. So 9610 divided by 6005 is 1.478. So that means from this, we understand that indirect labor is a semi-variable overhead, semi-variable overheads, which consists of a fixed element and a variable element. Okay, this cost appear to consist of a fixed element and a variable element. Okay, so that means this indirect indirect labor. Okay, so that means so that means let's say if we take the difference, okay, from 5,000 to 6,005, the difference is 1,005. So that means you see when the budgeted hours is, when the fixed element, that means, you know what is a fixed cost, a fixed element of indirect labor? You see, in the first lesson, I've explained to you that you must assume that even if there's zero production or zero revenue, the company may have to hire a security guard or a caretaker to take care of the factory. That is a fixed element of the indirect labor. So that means even if the budgeted hours is zero, that means the production is at zero level, you must incur a certain amount of salary cost for your indirect labor. Okay, then thereafter, your labor cost, there will be a variable element of your labor cost. That means the variable element will vary directly with production, so will vary directly with production labor hours. Okay, will vary directly. Okay, that is because you can hire those production labor according to your level of work, level of activity in your factory. So that means we are saying that from the level of budgeted hour 5,000 to 6,000, okay, so 5,000 to 6,000 is 1,005. Okay, the difference 9610 minus 9160 is 450. So that means from this level of activity, from 5,000 to 6,005, the increase in the indirect labor is 450. So that means we are saying that this increase is the variable, is the variable, the variable element of the indirect labor. So that means this increase is 450 divided by 1,005 is 30 cents. 30 cents is the variable cost per hour of indirect labor. Because you know why? The fixed element is when even the budgeted hours is zero, the fixed cost could be, certain amount, like what I explained in video 1. Even if your level of activity is zero, your budgeted production hours is zero, you still have to hire a caretaker to take care of your factory, correct? And you have to pay the caretaker the money even if it's zero. So when the production hours increase, this one increased by 1,005. The indirect labor increased by 450. This increase is the variable labor cost. Is the variable labor cost, correct? That is because when you increase your production, you will hire more so-called production labor that is variable, that is go by hourly rate, that varies directly with production level. So that's why when the budgeted hours increase, this cost increase is the variable cost, that is the increase. The increase is the variable, the cost of the variable wage okay, is the cost of the variable wage, which is 450, and divided over this increase is 1,005. So that means your variable wage cost is variable indirect wage cost is 30 cents per budgeted hour, per hour is 30 cents per hour. So from here we know that the variable cost is 30 cents per hour. So what is the fixed cost? Okay, so variable cost per assembly hour is 30 cents per hour as calculated there. So you see this one is 9610, 6005 is 9610. So we know that this 9610 consists of a variable cost and fixed cost. So now we know the variable cost. That means the difference must be the fixed cost, correct? So now we calculate how much is the variable cost. Variable cost will be 30 cents per hour times 6005. Okay, so 9610 minus the variable cost will be the fixed cost. The fixed cost is 7660. Okay, if you want to test on here, it's also correct, I can tell you. Because you take 5,000, okay, you take 5,000 times 30 cents is 1,005, okay? 5,000 times 30 cents is 1,005. Then you take 9160 minus 1,005. So the fixed cost I get if I applied in this level is also 7660. Yeah, so it's correct. So that means the fixed production overhead is 7660. Okay, so the variable overheads for indirect labor is 30 cents, and then the fixed production overhead per assembly hour is 7660 divided by the budgeted hours. This is the budgeted fixed indirect labor divided by the budgeted hours is 1.34. So you see, now we are all these they are saying that all these are overheads. And then just now we have actually calculated the overheads for every element. The overheads, the overhead absorption rate for depreciation is so much. The overhead absorption rate for indirect material is so much. The overhead absorption rate for variable indirect labor is so much. And the overhead absorption rate for fixed indirect labor is so much. So what is the overhead absorption rate? So the question asks, say, calculate the budgeted overhead absorption rate to be applied to the products in the assembly shop. So budgeted overhead absorption rate will be, add up together, 2.46 plus 40 cents is indirect labor, and then plus 30 cents plus 1.34. So budgeted overhead absorption rate is $4.50 per assembly hour. Yeah, so per assembly hour. This is the budgeted assembly hour. Okay, so then now we come to part B of the question. Okay, part B of the question. A manufacturing company is considering next year's production budget. Shown below are the budgeted unit costs for two components it make. Okay, this is the budgeted unit cost. Okay, it is possible to purchase X and Y from another manufacturer. So for 175 and 90 unit respectively. So X you can purchase from another manufacturer for 175, and Y you can purchase from another manufacturer for 90. The management is considering the following option. Option 1, buy both components. Option 2, make both components. So if you make the component, these are the costs. If you buy, these are the costs. Option 3, make one component and buy the other component. Advise the management which option they should choose. Show working and state the assumption you have made in reaching your answer. Okay, this question looks pretty easy, quite easy, you know. So how are we going to approach this question? So component X, component Y. So $ per unit. So okay, you see the question give you fixed cost, and then you have direct material, direct labor, variable overheads. Okay, then you have fixed overheads. So what is fixed overheads? Fixed overheads are the money that you have to incur, whether you make or don't make. Okay, even though you have zero revenue, zero production, you still have to incur this fixed overhead. Okay, which I have clearly explained in um, the previous video, in video 1 for you. So fixed overhead is not relevant because even if you don't produce anything, you still have to incur your fixed overhead. It is variable, the variable cost that matters. So the total variable cost for component X is this one. The total variable cost for component Y is so much. Okay, so I assume that this is B, and this is the price purchased from another manufacturer, which is A. Okay, so savings per unit, so which is the savings will be B minus A. Okay, if it's purchased from another manufacturer. Okay, so this one, if it's purchased, so if it's purchased, the purchase price is higher, so you won't save anything for X if you purchase. Okay, so for X, I advise we should make it, because your variable cost is less. The fixed overhead is irrelevant because we have to incur the fixed overhead even if we don't produce anything at all. Okay, so it is it is advisable to make component X, but component Y, you see, the variable overheads is 96. But if we buy from another manufacturer, the manufacturer only charges $90. So if we buy, we will save $6 per unit. Okay, so that means the conclusion is you should choose option 3, which is to make component X. We should make because it's cheaper to make, as the variable cost per unit is cheaper than the purchase price, and to buy component Y from another manufacturer. You should buy from another manufacturer because it's not advisable to make. It's not worthwhile to make. Okay, so assumptions would be the quality of the manufactured and the purchased component are the same. So I mean, even though it's cheaper to buy, what if you know, the one made by sold by the other manufacturer, the quality is no good, then you would rather make, even though it's more expensive to make. So we are assuming that the quality is the same whether you make or you buy. Fixed overhead are fixed at all level of production volume. So we are assuming that this fixed overhead is really fixed, because in reality fixed overhead is not really fixed. So our assumption is fixed overhead is really fixed. Even though if we don't produce, we still have to incur $15. Whether we produce or don't produce, our fixed overhead is really just $15 per unit. Okay, so we are assuming variable cost per unit would not be increased as a result of reduced production volume. Okay, so this is our assumption, because in reality the variable cost per unit could be increased if we reduce the production volume, because the supplier may charge us more because we buy less. You know, so that means we are just putting an assumption that variable cost per unit would not be increased if we reduce the production volume. Okay, then again, part B of the question is also testing your ability to answer the question according to your own understanding and answer it in your own way. A manager at a company tells you, we must clearly continue to make both components. Only a couple of years ago, we purchased some polishing machinery for use exclusively in the manufacturing of these two components. This machine costs $200,000 and it cannot be resold and used elsewhere in the company. If we cease production, this component will have to be written off. We will have to write off the net book value of the machinery, which is $160,000. Draft a short reply to the manager commenting on this statement. You see, the thing is, the answer is clear. It's just how we are going to diligently word our answer. Because the thing is, we are not even, you see, the thing is the machinery, which is the depreciation cost, which is a fixed cost. We are not in our assessment, in our answer just now, part B, we are not even taking into part A, we are not even taking into consideration the fixed overhead, which is the depreciation of the machinery. We are only taking into consideration the variable overheads. So that means the machinery cost, whether you write it off or throw away or whatever, is not relevant. Okay, so I just diligently draft a reply in my, according to my understanding, which is over here. Okay, you can pause the video and you can read it, and later on you should diligently answer in your own way. Okay.